60% of mortgages in Canada are set to come up for renewal in the next 3 years. And a new study by RBC says homeowners will be confronted by a, quote, payment shock or a rise in payment at renewal. That is, unless interest rates come down significantly. The study says the payment shock is a risk to Canadian banks and will impact revenue growth, mortgage delinquency, and other credit losses. Lenders are advising clients to increase monthly payments, make lump sum payments, extend loan periods, or switch from a variable to a fixed rate. Now, although the payment shock is expected for the next 3 years, another survey conducted by RateFilter is showing a significant amount of Canadians are struggling with housing costs. Here to talk to us about that is one of the co-founders of RateFilter and digital mortgage broker, Andy Hill. Thanks for joining us, Andy.
Thanks for having me.
So, first of all, tell us a bit more about what the findings were from your survey.
Yeah, we found that 51% of homeowners would start missing a mortgage payment if they lost their primary source of income within 3 months. So that was pretty startling. We also found that 62% of people surveyed were paying more than the amount of income that they should be paying towards housing.
Mm-hmm. And that's not uncommon for a lot of people, particularly as interest rates have risen, is it?
It's been a tough time for a lot of Canadians.
Now, lenders are advising people, as we said, increase monthly payments, make lump sum payments in an effort to combat this. But what's the advice when people are already stretched so thin? I mean, I think a lot of people would think, I could barely make the mortgage payment I have, let alone try and put a lump sum payment on top of it.
Yeah, I think remaining in a holding pattern is really what I've been trying to counsel people today. It's a tough time for everyone, and I think getting through this time, it's a cyclical top, hopefully. Mm-hmm. And we should see things normalize at slightly lower rates than today.
Right. And what's the advice that you give to people, for example, about any leeway that they may have with their bank or lender around if it's longer amortization or simply working out a scenario that works for them?
Yeah, I mean, if you're in a variable rate today and you're really stretched, it's probably a good idea to try to extend that amortization, like you said. Mm-hmm. Or if you can try to work with your lender and just pay a little bit towards principal. Mm-hmm. They're going to try to make you increase the payments a lot. Mm-hmm. Try to just negotiate on all of those terms. Increasing the amortization, though, is a great way to kind of lower that monthly exposure, stay in that holding pattern, and just try to get through this tough time.
And lastly, how open do you find most lenders and banks are to negotiating?
It takes some pushing. But I think with anything, it's just about talking to the right people and continuing to push. So don't take no for an answer. Just keep on trying, and they're there to try to maintain solvency. That's the most important thing.
Andy Hill, co-founder of RateFilter, we appreciate your time and your expertise.
Thanks for having me.
Cheers.